G'day guys, Ben and Simon here, and we are so excited to bring you the relaunch of our monthly property market update.
Our hope is that over time, these updates become something that you really look forward to watching each and every month. Alrighty, it's time to get stuck into it. So first, let's look at the monthly capital growth rates across the Australian capital cities. How are things looking, Benny?
In the last month, we've had three incredible standout performers, with Perth leading the way, followed very closely by Adelaide and Brisbane. Now, when we compare these monthly numbers against the annual numbers, Perth is kicking ass at almost 20% growth in the last 12 months, followed closely by Brizzy, which has done 16%, and then Adelaide and Sydney after that.
And that's been a super common trend that we've been seeing when doing these market updates every single month. Brisbane, Perth, Adelaide, really the front runners in Australia at the moment. And based on what all the experts have been predicting, those three markets should end up being the top performers at the end of 2024.
So the next indicator I wanted to look at is vacancy rates. Now, how are these tracking across the country at the moment?
The vacancy rates are still tracking extremely low, and we have a severely undersupplied rental market across the country. The national vacancy rate sitting at 1.1%, and with those higher capital growth rates, the cities of Perth, Brisbane and Adelaide are all seeing vacancy rates below 1% right now. Does make it super tricky on the tenants. Can be nice for the investors as everybody's seeing a little bit of rental growth.
Based on our analysis of history, a vacancy rate below 2% would generally be considered undersupplied, with a vacancy rate over 3% being oversupplied.
Another super important indicator is the monthly auction clearance rates. So how are things looking there at the moment?
Across the country, we're seeing auction clearance rates sitting just below the 70% mark. Again, something over 70% would represent a warm market. Over 80% would be a hot market, but we know a lot of Australia's capital cities outside of Sydney and Melbourne don't really go to auction as much, which is what we're seeing at the moment in Perth, as well as Brisbane and Adelaide.
Which is no wonder that those auction clearance rates are sitting a little bit lower right now, because the consumer confidence is super low right now, sitting just below 85 points, when the average from 1973 all the way through to 2024 was about 107.9 points. This is according to the Roy Morgan report.
Now, I think the confusion in the current market is the fact that prices are going up so quickly and vacancy rates are so low, but the way we're feeling about the market is almost at record low levels right now.
Now, something far more positive in the economy at the moment is the unemployment rate, which remained at 3.8% in February of 2024. Now, this is well below the long-term average. From 1978 through to 2024, the average unemployment rate sat at 6.62%.
Now, another indicator that I like to keep the finger on each month is just where the money is being lent. At the moment, it's pretty much sitting in line with long-term historical averages, with about 65% going to mums and dads and about 35% going to investors at the moment.
Something that I found super interesting reading an article recently was that international investors make up over 10% of Australian property purchases at the moment as well. So heaps of international investing coming back.
Now, our most touchy indicator at the moment, at least in my household, is interest rates. Unfortunately, it's not the good old days anymore where we're all sitting on 2 to 3% rates. In fact, in the last month, the variable interest rates in Australia were sitting at about 7.24%, with the fixed interest rate sitting a little bit below that, which I love, at 6.71%.
Yeah, there, I'm feeling it at the moment as well, but I am really looking forward to a rate cut later this year or early next, which is the predictions from most of the major banks around the country. One of the things we've been hearing about a lot in the media is the number of listings available being undersupplied right now. But according to SQM, in March of this year, there was over 256,000 properties available for sale.
Now, if you follow the media as well, you'd think that there are hundreds of thousands of Australians right now selling their properties and getting out of the market because of the interest rates and because they can't afford them. But if you look at the actual data from SQM in the month of March, there are actually only 5,300 properties sold under distressed conditions. I think one of the most important things that we aim to bring you through these monthly market updates is the truth in the data versus the hearsay in the media at the moment.
So as you can see from this information, there is a lot of positive signs for the Australian property market. But as always, we don't love to look at things on such a short-term basis. We like to look at the big picture and the long-term performance of Australian property. Now, this leads us into our new segment, the Gold Nugget of the Month. Now, from 1972 all the way through to 2022, house price in Australia went up on average by 8.2% per annum, according to Simon Priestley, which is just an insane growth rate, one of the best performing assets in the world over the last 50 years.
Now, to round out this month's market update, I wanted to talk about a positive piece of news that we've read in the last month. Now, we were just reading an article from the Australian Financial Review, which looked insane. Basically, they were projecting the average house price in Sydney to go to $2 million by 2027, which is insane. Now, the Australian Financial Review went on to say that they expect the average house price in Melbourne, Brisbane, and Canberra to reach $1.2 million in the next 3 years, which is also crazy, especially for our favorite market in Australia right now, which is Brisbane, where house prices are currently only sitting on average at $880,000, with countless suburbs sitting well below that right now. The article went on to round out saying that Perth looks like, and Adelaide as well, they'll have an average house price of over $1 million by 2027.
Now that's pretty ambitious and bullish, but when you actually think about it, with the expectation of rates coming down, confidence going up, and the chronic undersupply of properties available at the moment, well, maybe the Australian Financial Review will be right, but I guess time will tell.
I just want to say a massive thank you for watching our monthly market update. At Pumped On Property, we believe that you're born to be financially free and living a life filled with choices. So if you haven't already done so, please give us a thumbs up. Please subscribe to our YouTube channel, and please share this with someone who's either super excited about property or freaking out about the market, so they and you can build your property portfolios with confidence and work towards financial freedom.
Getting my facial expressions out of it. I'll just start again. Take 7.
Roy Morgan's a business, just FYI. It's the Roy Morgan report for ANZ. Oh, it's the same thing.
Cool, I'm going to be completely honest. I was thinking about moving my head, not what you were saying.
I don't know what I said either. I can't fucking, I'm just best to stop laughing right now. Eh? I'm like holding it all in, eh?
We're good. Waka, waka, waka. So they.